We can go back now to the Stanbic Graphic Business Breakfast, which has been going on in the interim. We can rejoin the authorities as they speak on matters regarding the stability of the city.
To import almost everything. Growing up, I used to, as a graduate student, one of the things I love doing is to conduct surveys of industry. So I used to go around North Industrial Area and all the. Now, if you drive through all of these places, you find some converted into churches, demolished into real estate, warehouse distribution. You don't find actual production. So if we don't produce, and you can check the statistics, industrial growth has been negative most of the time. It is the past few years that we are seeing positive growth rates in the industry or manufacturing. So if we are not producing, we are not exporting, of course, the demand for foreign exchange will certainly outweigh the supply, and we'll continue to have depreciations.
Okay, I want to go to my audience now. So let me. Yes, quickly, and then I'll come to my audience. Please let the microphones go around. I'll see my hands and I'll call you. Yes, Philip.
So Peter is right. The real sector needs to be worked on. The issue with the real sector is we should just not be producing, but we should be producing for exports. And producing for exports means that you need to penetrate markets. And to penetrate markets, we need the right incentives on the ground to get people to produce and export. And then it hits back to Mr. Guta, because Mr. Guta is also looking at trade. Trade, as he was speaking, what came to my mind is, why don't we change the name from Guta to Gupta? Ghana Union of Production and Traders Association, because I believe they need to refocus themselves to be looking into production, to be looking into issues that they can lobby government on to get them to produce for trade and for exports. This is what was going through my mind as he was speaking.
Thank you very much. I want to take my audience now, and we are live on Joy 99.7 FM, live on the JoyNews channel as well, and you're welcome to join us on the Breakfast Forum 2019 hashtag. Yes, your name, please, and your... let's make our contributions and questions very short so we can have as many voices as possible.
Thank you very much. My name is Joseph Paddy. I'm the PR of Guta, so I came with my boss. Yes. Professor Corte said something. He said import is easy and cheap. It's not easy at all. Because traveling to Japan for 3 days, going to the junkyard to go and get the stuff is not easy. But what, yes, Guta, our intention is not only to import. We also want to go into manufacturing. But cost of transaction with the bank sector is very expensive. So if the banks can assure us that tomorrow morning they can give us a rate of 5%. If anybody wants to go into manufacturing. Because as it stands now, we are not competitive. We are getting a rate about 27%. Your competitor is getting a rate about 3%. So in the beginning, you are not competitive. You can't compete. Even price-wise, you are not competitive. So that's the challenge, because some of our Guta members gave their money to a manufacturing company to produce confectionery, this biscuit. For 3 months, the factory could not produce. They have to go back for the money and go to China to import. So these are some of the challenges we face. So if the banks can assure us, will give us a cheaper rate when we want to go into industry and manufacturing, the banks are here. They should answer it now before I leave.
Okay, thank you very much. I want to take more contributions. Yes, sir.
Hello, my name is Edward Wonyo, Executive Secretary, Policy Support Services. I want to make a very brief comment on an issue was raised by one of the speakers about importing and what is spent on importation and all that, and especially capital flight. Now, I realize that sometimes we continue speaking and the work on the ground, there's too much, there's such a huge gap with what the, let me say, economic management managers do and what is happening on the ground. I'll just use one example. We were all excited when the foreign car makers came in and all that. Government signed an agreement with them to begin to do manufacturing. Today we are talking about the need for us to do manufacturing here. But then when the comment came upon what was done for this local car maker, Kantanka, I heard a comment that I've been battling with in my mind up to this time. There was this government official who said, we don't have an agreement with Kantanka because they don't have a good business case. So I'll also ask that person, considering the amount of work in the background that goes on before the agreement is signed with the foreign company, what homework was done on this local manufacturer that has been in the news all the time? They're talking about how that you approach this government, the government will go, and then another one will come, they approach them, and then we sign agreements with these foreigners and say that the local one has a bad business case. Let's take an example. Those were the times where we used to talk about the wine wells and butter mountains coming out of the agricultural subsidies that the developed
If you can wrap it up for me, I'll be very grateful.
Okay, very quickly. We're giving to their farmers. Now, as you are speaking, the trade dispute between the US and the EU for this past 14 years is about the subsidies that the EU is giving to Airbus, the airplane maker, and then US to Boeing. So the challenge I want to throw to our economic managers is that this time the game plan has changed. So they should up their game. How can't we have an agreement? What is the meaning of Kantanka does not have a good business case?
Okay, thank you very much.
More can be done.
I want to take Hans. Can I? Yes. Let me hear from this other side of the building. Thank you, sir.
Please, my name is Henry Bruce. I just want to react to this gentleman. Just simple thing. If you trust politicians, it's like a prostitute telling you she's a virgin. So don't. Let's move on. Please, around 1971, President Nixon passed a law. And then around 1971, at the same time, old currency was 1 cedi, 17 pesos to $1. And then, when he changed, around 1971, from money to currency, do the central bank understands what this means? Earlier, I said, there was a problem of like a dollar, like a snake, biting the city. And up to date, I'm happy that the research department is here. They should answer why from 1971 up to today, arresting, shooting, whatever, praying for the city. Hey, you can even bring 1 trillion to Ghana economy. Within 2 years, all will go. All right, so let's move on. In terms of trade, with our crude, cocoa, whatever, gold and everything, we don't trade in worldwide 0.00001%. Meaning, one person can trade for $1 trillion, and our economy is not even up to 1 billion. And we are sitting here, it looks as if it's fun game since 1971 to this time. No apology to any government. You have to back up what? Your game. Let's move on. We discover crude oil.
And that, can you take a final one for me? And then
yes.
Yes.
We discover crude oil. We have cocoa. The crude oil, I'm into the oil sector. Do you understand? What it is our governments, how much do you own about what they are exporting? Why don't you just set up the damn refinery and refine all the crude before you export? How about your gold?
Yeah.
What about cocoa. Even cocoa, you know, do you know the last thing I want to say? In terms of pricing in the international world, anything we produce in Ghana here has been priced by international price, including toothpick importing from China. Whatever we have is somebody sitting somewhere.
Yeah. I want to...
They have.
Thank you very much.
All right.
I mean, so that goes to changing really the economic fundamentals, and I'm grateful for the passion with this was addressed. I want to take a few more. I don't have a lady. Do I have a lady who wants to contribute to this? I'm hearing too many male voices.
Thank you very much.
Okay, let me hear you briefly. Make it brief.
My name is Eric Amponsa-Boateng. I'm a tax consultant. I would like to ask Professor
Quote?
Yes, Prof. Quote. He mentioned that we have exchange rate deviations, and I wanted to know what is the rate? Is it 5%, 10%? So,
okay.
Note that.
Thank you.
The other issue with all of us here have been talking about productivity. You observe that when it comes to the private sector, they do much better. The government sector, they don't do so well. Now, for Guta, you agree with me that when the cedi depreciates, it affects you to the extent that you have what? Losses. And our laws are saying that for your normal business, you can carry forward the loss for only 3 years. And those in the priority, like oil and gas, 5 years. I don't think that is the way to go. Because if you make losses, let's say for 4 years, the law is saying that you can carry forward the losses for only 3 years. What happens?
Okay, I think just for the sake of time, I need to have other people also contribute. So
just the
if you
last
don't mind, no,
just the last one.
Because of time.
This is for the governor.
Very briefly,
okay.
Governor isn't here, but you have the director of research.
Yes. You see, what normally happens is that let's find out how monies are moved out of the system. Most of the time, these foreign-owned firms, they move monies from their income surplus. They tell you they're paying dividend, and the rate of tax is only 8. Okay, they say that they charge some fees, management fees, technical fees. The expatriates who work in Ghana, look at what they earn. Let's go to the offshore.
Okay.
And then BOG, you are there, and then you are telling me that there's nothing you can do.
Okay.
Investigate,
I think we get the question.
A proper research, and you find that monies are being siphoned out on daily basis in Ghana.
I'm grateful.
Let
me take a contribution from the front. Yes.
My name is George Pra, and let me say that it just seems to me clearly that we have all the answers in this room, and they've been very well articulated. I sometimes wonder about our priorities as a nation. When government raises $3 billion, and the priority seems to be infrastructure, which we need. But surely, $3 billion invested into agriculture for export, invested into manufacturing for export, invested into service-oriented industries that have an export propensity. Surely that will give us the enablement to deal with the infrastructure out of the proceeds from these areas, which will drive the economy into the position of sustainability in our exchange rate. I think the key question here we're talking about is sustainability. And very often, the policies that we hear of are very short-term. They do not enable sustainability. And we are shying away from the very areas that will drive us towards sustainability, which in my view are agriculture, industry, manufacturing, and then services, all with an export orientation. Countries like Malaysia, Korea, decided that we are going to go for exports and invested in these areas to drive their exports. In Ghana, I don't hear a comprehensive export development strategy as yet. And so it worries me when we raise $3 billion here, $2 billion here, and it's going into politically very attractive areas like infrastructure and not dealing with the sustainability question that we ought to be dealing with.
Thank you very much. I will go to the back. Okay. Yes. I'll take you and I'll go to the back. Yes.
My name is Charles Buckman. First of all, I was privileged to be in an incredible project called from Stanbic Bank, the forward-thinking bank, I call them, Hack Lab on Saturday. And one of the things that the young generation went on about was about this whole dollarization and whatever. They came up to me in the mentoring session. They kept on telling me that it's lifestyle adjustments and changes in this country would also help with this situation. So as much as we talk about the philosophies.
We've got all these programs lined up for you. Do stay here with us on News Desk for these headlines and more. But now let's take you back to the Graphic Business Stanbic breakfast meeting.
If you look at the statistics that are in various websites, official websites, rice importation constitutes only 0.58% of the country's importation. So we are talking of a product which is only contributing that small volume. My concern is, because it is probably politically correct, people use rice because everybody understands, oh, rice, everybody eats it. But I think the focus should also be on the other side of the 99% that is also part of, contributes to the outflow of dollars from the country. So I think the focus has to be mixed rather than just a political statement that rice is what changes everything. You only import 170, 180, $200 million worth of rice in a year.
Okay. Thank you very much. I'll come to my panelists for them to wrap up. Prof, you have to say about the questions and contributions that have come in? That's all.
I don't know what statistics you're quoting, but I used official statistics from UNCTAD, the United Nations Commission on Trade and Development. Okay, you're on. Trade, UNCTAD data 2017. And I looked back. Rice is the 6th on the list. Number 1 is motor vehicles. Motor vehicles, they are divided into 2. Motor vehicles for transport, that's number 1. Motor vehicles for goods and services, I think is the 2nd or 3rd. Rice comes 6th. And when I computed, it's about 4.something% of total import bill. Rice ranks 6th. So I don't know where you're getting your statistics from. It's very, very significant, and we need to produce more of what we consume. I think that's the point I need to make to you. You may check and then compare with your data source, whichever is credible, you take it. But UNCTAD is a well-known statistical database. Then there was this issue about the rate of deviation. I think 5%, anything up to 5%, we can all live with. But if your exchange rate is depreciating by such a significant margin, 10%, sometimes as high as 30%, that is quite difficult. Oftentimes, when you hear traders, people making noise, then you see that we have the rate of depreciation is quite significant. So that's the point, if I got your question very right. Then last, most of them were comments or perhaps some kind of hard hit on policymakers. But I think the point made here that temporary interventions are not sustainable. The central bank can continue to intervene as and when needed. But these are all temporary measures. The long-term solution is for us to grow our export base and reduce some of the things we consume. But that also comes with mindset change. I think somebody mentioned that anything foreign is good. Sometimes they are not good. But just because it's imported, as soon as you pick the product, you want to look at where it's made from. Made in Togo or made in Senegal, you are happy. But we place less value on our products. But I also want to advise our manufacturers, they should add a bit more thought and produce to international standards. Ghanaians will love their products. Thank you.
Thank you very much, Prof. Philip?
Let me use this juncture. Hello? Let me use this juncture to just hatch on what Prof said regarding interventions. And I see that there is some misconceptions when people see that the central bank's reserves have dropped. And the first thing is that we have intervened. But I think from the policy side, we are also a market player. The central bank is also in the market buying and selling forex, foreign exchange, like any other economic agent. And from the central bank's point of view, our sales to the banks, to the market, goes to achieve two main purposes. So we do that for BOP purposes. And for BOP purposes, we are facilitating trade. For BOP purpose, we are helping pay government debt. Okay, we are supporting the banks to import. We are paying coupons associated with foreign investors' investments in the country. So on one side, whilst we are helping support BOP to ensure that the economy continues to run smoothly, on the other side, we also do intervene, but very minimally. And it brings us to the question of what Prof said, that there is a certain exchange rate level, and when the central bank sees that the exchange rate has gone past a certain level which is consistent with the fundamentals, it steps in minimally to try to correct those fluctuations. So the issue about loss in reserves and what we do are on two different levels. We are supporting the balance of payment, we are supporting trade, and that is normal. Every central bank does that to ensure that the economy runs. And then the second thing is on the interventions, which we do, but very minimally. Very minimally. Okay. It's just what I wanted to clarify.
Yes, sir. I am tend to agree with my big brother when we said that we have to invest in the areas that we are doing well. We are not reinventing any wheel. If we know that cocoa is helping us, nothing prevents us from investing in those areas. Cashew nut that we are talking about diversification. Even with manufacturing industry, there are so many companies that they are doing well. If we take maybe clay, we take the chocolate that we do, the ceramics and all that. If you think that doing tiles and all that is of comparative advantage to Ghana, nothing prevents us from making tile making the hub of Ghana, but not necessarily to import what we do not have competitive advantage. If a country, by way of localization and the way the raw materials are situated and all that, manufacturing favors a certain geographical area and their prices are very good. It doesn't mean we have to impose on us the manufacturing of same. We might lose. And that's the problem that we are facing. So we have to look at the areas that we have advantage, that we know of already, and then invest even more. Nothing prevents us from doing that, and it will help us. Now, we're talking about the excessive importation and all that. Don't also forget that we are now a middle-income country where people have developed taste. Much as we are all saying that importation, we are doing too much importation, none of us can also come and out boldly and say that let's ban importation. Let's ask their cars, the furniture that they want, the TV set, the state-of-the-art TVs and all that, the chandelier here, and all that. Let's ask.
The suits that we are wearing.
The suit that
a lot of the bankers wear.